Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about Hedera Hashgrapth and a market opportunity that, if Hedera could realize even some of it, might be a massive boon for the project. That in conjunction with some tokenomic factors might actually be especially bullish for it in the long term. So let's go ahead and talk about that. So to start off, I just wanted to show the HBAR price, and when you just look at this across time, so this is the whole history of HBAR's price action on the daily chart. This is a depressing chart, and I think anyone who has invested in HBAR has not been feeling all that happy about what's going on with price ever since, back over here in the fall of 21. It's pretty much just been down only. We're back down at levels that we were only at, previously, back in January 21, and also before that back in summer of 2020, even all the way back in early 2020 was the last time we've really seen these price levels. So not really a very bullish thing. But what I want to talk about first, before I get into that kind of market opportunity that I want to focus on in a minute, is just an observation about maybe why this price action is happening and how it's a little bit deceiving for how well HBAR has been holding up in this bear market. So if you look at the price by itself, HBAR has not held up well at all. We can see from the all-time high, the max drawdown was 92%. That's pretty brutal. But interestingly, if we flip over to the chart that shows HBAR's market cap, and remember, market cap is calculated by multiplying the price of HBAR by the circulating supply at that given point in time. So how many HBARs are in existence circulating around or are able to be circulating? There's a lot of HBAR that of the maximum supply of, I believe, 50 billion that are not in existence or not out in circulation yet. There's a certain amount, and there's inflation, right? There's more and more supply hitting the market as time goes on. And what you'll notice when you look at market cap is that it's been holding up a heck of a lot better than price has, right? Look at price, massive, horrible drawdown, 92%. If we look at the market cap and its drawdown, still not great, 86%, but a notable difference, right? And in fact, we're just so below levels that we were back in the summer of 21, really at levels we were back in early 21, but notably nowhere near levels of market cap that we were all the way back here in 2020. We're at clearly an elevated level from there. So what the heck is going on? Why is there such a discrepancy between price, which has basically round tripped back to these levels, versus market cap, where we actually are still sitting at 1.12 billion here as I record this, up at levels just below where we were in the summer of 21. A very different story from the price. Well, as I mentioned before, the critical thing here is circulating supply, because this is calculated by multiplying price by circulating supply. So if price is being wrecked very heavily, but then market cap is holding up better, that would suggest that we've actually had a lot of new circulating supply hit the market to boost that up, right? Basically, there's been a lot of inflation, and that's exactly what's actually happened. And one of the big reasons for why this has likely happened, if we flip over here to CoinGecko, which has a really nice breakdown of HBAR's tokenomics and the vesting schedule of HBAR that go to different areas. So like the founders, for example, Swirlds, ecosystem development, different purchase agreements, and employees. There was a lot of HBAR that had been locked up and was vesting over time and being released to these different entities and groups who then would be free to sell it on the open market. And what you can see is that, really kind of from HBAR's beginning all the way up through where we are today, which would be, on this chart right around here, there's been a pretty rapid vesting, right? It's been a pretty rapid distribution of HBAR as out to these different groups. And then what you can imagine is that as these groups get a hold of them, especially when the price of HBAR goes on a big run like it did back here in 21 and then going on again here in later 2021, you might imagine them to sell a bunch, right? They're worth, a lot of money at that point. And then especially for the people who had, gone in early as investors, they probably made a ton of money on their investment already at that point. They're probably going to start selling. They're probably going to start distributing their HBAR. And that'll create negative pressure on the price. And so that's probably partly what we're seeing here, where price is going down. There's been a lot of selling throughout here. It's been kind of suppressed by all that supply hitting the market. But then even so, that increase in circulating supply has been so great that even all that extra selling pressure that we've seen that's been driving price down has not been enough to really bring the overall value of HBAR in market cap terms back down to those same previous lows that we're seeing price at over here. And the good news of this is that if you look at where we are right now, over here, just about to enter in Q1 of 23, then you can see we're near the end of the worst of it, right? It'll be around middle of next year, 2023, when the last of this vesting will happen. And then at that point, all of the supply that was going to be vested to these different groups will have happened. You see them all just plateau off. There's no new circulating supply going to those different groups. And what that means then is that any price action following after that is unlikely to be suppressed by this massive, not really inflation, but sort of inflation, this massive distribution of HBAR to these different entities who are then free to sell. That's no longer going to happen. They'll probably still hold some HBAR that they might sell later, but they're not getting this big influx of new HBAR they could choose to just dump at that time. And so what that means is that, a lot of this HBAR might have already been dumped. It's not really there to be dumped in the future by them. It's been bought up by other entities or other retail investors, etc., which might then mean that we can get some more organic price action. So not price action that's being affected by basically dumping of early investors on retail, but of actual just market dynamics, supply and demand driving things. So that's something that I think is an important setup for what I'm going to talk about, because really, if we think about it that way, the price of HBAR, back to this whole point, is not very diagnostic of its value as a token, in the sense that it's really partially reflective of just a lot of tokens being dumped on retail, that likely those tokens have been acquired for much lower prices by earlier investors and things like that. So let's go ahead then and talk about the possible bull case, or one of the possible bull cases for HBAR. So, once we get clear of this and we're clear of that artificial sell pressure, what is a bullish catalyst that could really push HBAR further up? Now, of course, there are many, but the one thing that I wanted to talk about a bit today, which is, I think, an interesting way of thinking about this going into the future, is the idea of tokenization of different assets or things on the blockchain. So tokenization is something that's been talked about a lot. It can be used for many different things. And one of the things that I wanted to kind of focus in on was this report that came out back in September. So you may have already seen this before, but if you haven't, I think it's just an interesting thing to talk about in this context. So this was done by the Boston Consulting Group, BCG, and what they were basically focusing on here is tokenization of different assets, different real-world assets. And they're really talking about as the context of using tokenization to unlock liquidity of really illiquid assets. So for example, real estate tends to be quite illiquid, and it's quite high cost of entry, right? Unless you have, sometimes hundreds of thousands of dollars, if not millions, you really just can't even get into that market. And certainly you wouldn't be able to afford just having real estate as an investment beyond maybe like a house that you buy or something like that. And also, even if you do own a house, that investment is pretty illiquid. You can't really, it's hard to tap into the liquidity of your house unless you're just, getting mortgages and borrowing against it at your bank. But it's kind of a different sort of equity, right? It's not the same as just being able to fractionalize your house and say that you're just going to sell off, portions of it while maybe maintaining the majority stake. So really what they're talking about here with this idea of tokenizing global liquid assets is that it could unlock the door for a lot of new money to come into the space. You wouldn't need to have just these big investors being the only ones who can play in this space. You could have even just retail investors buy small fractions of these different types of illiquid assets, and then that unlocks a lot of liquidity. So there is some use case to that, because generally speaking, markets like to find ways to make assets liquid. That's something, even in the crypto space, you see examples of this, the idea of liquid staking, when you've staked your asset, but then you can still go and sell it, through different platforms, like on ETH, for example, Lido being a big example. There's a lot of demand for that kind of thing. Just as there is in crypto, there's a demand for that thing in the real world as well. And blockchain provides a very useful way of doing that because it's immutable, it's trustless. You don't have to have some centralized entity you're trusting. It's all there on the blockchain. So there are a lot of advantages in that space. Now, what's interesting about this and what this report talks about is this graph right here, down here on page 7. I'll also leave a link to this report in the description if you want to go check it out for yourself. But here they're basically just giving, on a yearly basis, what is the market opportunity for tokenizing different assets on blockchains in terms of trillions of dollars. And what you'll notice is that by 2030, and what they claim in their estimates is a highly conservative forecast, so basically shooting on the low end of what might be possible, they're saying there's a $16.1 trillion market opportunity for tokenizing different assets on blockchains. And then their best case scenario they give would actually be upwards of $68 trillion. So a pretty massive value there. And so what that means is that any given blockchain, so assuming this is correct, right? We don't know. This is just their analysis. They could be wildly wrong. You can take a look at the report to see if you think that's likely the case. But, let's just take it at face value. Let's say that this is at least a reasonable estimate, 16.1 trillion at that point. If that ends up happening, if that ends up being the case, then any blockchains that can get involved, it seems like they should do quite well in that environment. Because again, if you're using a blockchain to tokenize assets, you're having to use the blockchain. You're going to need the native token to transact on it. And then also people will probably just want to hold the native token in something like a proof of stake kind of network just to gain a ownership of it, be able to earn staking rewards, all that kind of stuff as well. There's demand for use and just people might want it as an investment. And that's, of course, where, this is the market opportunity I'm talking about, where even if HBAR could capitalize or Hedera could capitalize even just a small fraction of that, that would make its current market cap of 1.12 billion seem like nothing, right? Even if HBAR were to get, 500 billion, worth of tokenized assets on it, a trillion, let's imagine, then it seems highly unlikely that HBAR would still stay down at a market cap of just a little over $1 billion. So that is kind of the big bull case. And so, of course, you can let your imagination go wild. The larger a share that you think HBAR could grab, the more insane that the valuations could potentially get to. And so I think it's a little bit easy to let our imaginations run away with us. But this is certainly a massive market opportunity. It's something I think is going to be important to keep our eyes on, because a lot of times in crypto, we're thinking about very crypto-centric things to give value, like DeFi or NFTs or things like that. But really what we haven't really seen yet, and what maybe could be coming, at least this is what the report is suggesting, is a broader adoption by more traditional areas of finance, using blockchains to unlock liquidity where currently it's a lot harder to do that. So that's a massive bull case. And it's hard to even make a prediction of how high HBAR could go, or Hedera could go, if it would get a sizable chunk of that market. But it would certainly make this look like a blip on the radar, I would think, in the grand scheme of things. Now, that's obviously a very bullish take, to say that that's possible. Let's talk about the caveats, though, or the things that, would get in the way of this thing happening. Because I think that's very important to think about, because I think it's easy for anyone who's a fan of HBAR, who likes the technology, to just kind of get carried away and say, well, obviously HBAR is going to capitalize the most of that because it's the best, and therefore, HBAR is going to go to the moon, and all I have to do is buy HBAR now and I'll be a billionaire, in 10 years. Obviously maybe anything's possible, but I kind of want to pump the brakes a little bit and say, hold on a second, there's some things that are really important to consider before you make any kind of conclusion like that. So let's talk about what those concerns might be. Well, the first one obviously would be that this is just wrong. That, for one reason or another, maybe regulations or other things happen that just make blockchains unpalatable to the broader space, or even get banned broadly, and then this is just not even possible. So that's obviously, one thing that could happen, or just kind of different versions of that where, it's not even the case that this happened. The other thing that's also possible with this is that it wouldn't be a public blockchain that holds this. It'd be some private blockchain that operates all of this, similar to what people talk about with central bank digital currencies. You can imagine that there's some centralized blockchain that handles all of this, that basically just cuts out public blockchains from the question entirely. And so HBAR wouldn't even stand a chance because it wouldn't, be a part of that centralized system. So, that's of course possible. We don't know if something like that would happen. Now, that's one thing that could happen, right? I just say that public blockchains as a whole lose out, so therefore HBAR obviously has to lose out also. There's also a scenario, though, where that doesn't happen, where they do use public blockchains as a solution for this, or at least a sizable chunk of this. But then also we have to remember that HBAR does not exist in a vacuum. It's not the only DLT out there, not the only kind of solution. Obviously they're using blockchain. Really, this just means DLT. HBAR is not or Hedera is not a blockchain, but it's the idea of a blockchain, a decentralized ledger. That's what they're talking about. But the thing I have to remember is that HBAR doesn't exist in a vacuum. So I'm going to just zoom in on this table here. It might be a little hard to see, but they give some examples of different projects that are already doing things kind of like this idea of tokenizing different assets. And they list off, what blockchains are being used by those different projects. And what you'll notice is that there's a lot of competition already. And actually, in the examples they give, HBAR isn't even, Hedera is not on these. Now, obviously, that doesn't mean that there aren't projects on Hedera that are doing this. There are. It's just that they didn't give an example. Well, what they do show in this table, or what it does to show, is there's a lot of competition, right? Algorand, Avalanche, Ethereum, kind of obviously Tezos, Stellar, Ripple, even EOS, Polygon, etc. There's a bunch of competition in this space because there are a lot of public DLTs. And now you might say, oh, well, who cares? HBAR is better than them, so therefore it doesn't matter. Well, I'll leave it up to you to decide which is the best blockchain, but I think you have to just admit there's a lot of competitive blockchains out there, right? Even if you think HBAR is the best, there's certainly other ones that have good technology that can compete. If they couldn't, they wouldn't exist. Algorand, Avalanche, for example, being two smart contract enabled ones that, are able to do a lot. You can argue if, obviously anyone can argue which one's best. I'm not going to make an argument. I think HBAR is a very strong project, has strong technology, but sometimes that doesn't matter, right? It's not always the project with the best technology that wins. It can be another one as well. And so, I leave it up to you to decide which one's best. But just remember, even if you decide one is best, that doesn't mean that it has to end up performing the best, because there are other factors that matter as well. Just like, which ones just happen to grab up the most market share early, for example. I think most people would say that Ethereum has a lot to be desired in things like its costs and its speed, but it was also the early mover. And so in some ways, people don't really care. They're willing to take that trade-off for some of the other advantages, not just technologically, but also just in terms of adoption. There's just a lot more liquidity on Ethereum for things like DeFi, so people use it. And there's a lot more developers for it. And so a lot of people just like to develop on it. And so even if you think HBAR is the best DLT technology-wise, does not guarantee that it will perform the best, or even that it will make it to this kind of late stage that we're talking about up here, where this market share would be possible. So those are the caveats, right? Those are things that we have to keep in mind. And so that's where, when I think about it, when I think about something like HBAR as an investment, none of this is financial advice, of course. You should be making your own decisions. But for me personally, I look at this and I say there's a lot of potential here just from that. But then you have to keep it in the context of the other things that are going to be competing with it. And so then really the question is, how confident are you that HBAR is going to be the thing that wins? If you can just objectively look at all the facts and come to the conclusion that there's no chance that anything but HBAR will succeed, then, good for you. I'm personally not there, though, yet, right? As strong as I think HBAR is technologically, as a project, I am not convinced that other things won't be able to potentially supplant it for multiple different reasons, right? As I just mentioned before, there's no guarantee that technology is ever going to bring something across the finish line. So for me personally, when I think about this, I kind of think about more as keeping that as the massive kind of goal long term. But then along the way, when deciding whether or not to be investing in a project like HBAR, evaluating that thesis constantly. Is Hedera doing the things it needs to do to be one of those players in the future in that market share? If they are, great, then that's a positive sign for that thesis. If not, it's not so great. And the other thing you have to keep an eye on is that thesis even viable? Are there signs that kind of market share is actually materializing like that report is thinking that it could? If it is, then again, great. That means the thesis is on. If it's not, then that's concerning. That might reduce it. And so ultimately, it becomes a question of risk management, right? The whole idea of risk management is you come up with different probabilistic outcomes that could happen, and then you decide how much you're willing to stake on that. How high is the probability? And if the probability is, let's say, 55%, then you probably don't want to go all in on it, because would you really want to go all in on a 55% chance of success? Probably not. You probably want to scale down. But then if it gets to the point where the probability is higher, maybe higher allocation is warranted. But then again, keeping in mind that if you lose everything, is that going to be disastrous? If it is, that probably is going to change your outlook. So the long and short of what I wanted to kind of get across to this video is that just first off, the HBAR price is a little bit deceptive, and that clear skies might come regardless of what happens. But then broad term, there are some things to keep an eye on that if HBAR gets a stake in, would be absolutely massive, and what I personally think would make its current price action just a blip on the radar off to much sunnier skies. But then, keeping in mind the broader context in that thesis, and not to get too carried away with it right now. thing that I get really concerned about is people will take a data point like this or something like this and say, oh, guaranteed then, everyone's going to be a billionaire who buys HBAR right now. And I just really want to make clear that there are other things you have to think about as well that really, I think are important to consider, and that I think it's jumping to conclusions to say that this is a done deal. It's a massive jump to say that this is a done deal, and I think we have to think about this more probabilistically. But anyway, just something I wanted to talk about, something that's interesting, and certainly something that could be in HBAR's future. So again, not financial advice, just my thoughts on this. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.